Open the app, deposit cash, tap a bright green button. You are now officially a stock market investor. It takes less than 3 minutes, and you don't need a license, a degree, or a single hour of training to start risking your life savings. This frictionless setup is entirely by design. It makes trading feel like a casual mobile game, but the slick interface masks the reality of what you're actually stepping into. You are walking onto a cutthroat battlefield against people who do this for a living. The market requires liquidity to function, and that liquidity is routinely provided by the so-called average investor. Without millions of underprepared retail traders blindly buying and selling, the disciplined algorithmic professionals wouldn't have anyone to extract profits from. Treating the stock market like a hobby carries an expensive price. Professionals thrive by treating the market as a business, and those who don't are simply providing the capital for them to do so. Take the case of Joe Smith. Joe was a retired civil engineer who spent decades mastering his field. Because he was highly educated and successful in his career, he assumed picking stocks would be relatively straightforward. His preparation consisted of reading a few popular finance books and watching the daily financial news. He figured the worst of the early 2000s market crash was over, and he could comfortably pull in a 10% annual return to fund his retirement lifestyle. This chart illustrates the fatal mathematical flaw in his strategy. For a while, the bull market validated his approach, but when the 2008 financial crisis hit, Joe watched his account plummet, ultimately losing nearly 60% of his equity from its peak. To just get back to his initial starting balance, the math dictates he now has to make a massive 70% return on his remaining capital. Joe would never attempt to design and build a suspension bridge without rigorous structural engineering training. He knows the bridge would collapse, yet he exposed his entire retirement nest egg to the financial markets with zero structural preparation. Raw intellect cannot save a portfolio from a market wipeout. To protect your capital, you need a tested professional system. Entering the professional trading arena requires a commitment on par with medical school. A brain surgeon undergoes 16 years of basic education, 4 years of medical school, an internship, and a residency before ever operating independently. Professionals ignore hot tips and gut feelings, operating strictly on statistical data. They execute pre-tested business plans that dictate exactly how to handle various market conditions. To survive long-term, you have to actively reject the ego-driven mindset of the average investor and submit to a grueling, mechanical framework. This diagram outlines the 5-step structural framework professionals use to consistently extract returns, regardless of whether the market is going up, down, or sideways. Step 1 is to work on yourself. Before looking at a single stock chart, you have to resolve your own psychological biases. If you skip this, your emotions will override your logic and sabotage your execution when real money is on the line. Step 2 is to develop a business plan. This document functions as a daily operational guide, detailing the specific systems, from research to cash flow, that manage your trading venture. Step 3 requires building specific trading strategies. There is no single magic bullet. You have to design and test different approaches adapted to distinct market conditions, because the strategy that works in a quiet bull market will destroy your account in a volatile bear market. Step 4 focuses on position sizing. This is the critical mathematical variable that answers exactly how much capital to risk on any given trade. It is the only way to meet your profit targets while mathematically preventing account ruin. The final step is to minimize mistakes. In professional trading, a mistake is strictly defined as failing to follow your own predefined rules. This requires constant, rigorous self-auditing. Without all 5 of these steps operating together in unison, you do not have a trading system. You simply have a sophisticated gamble. Operating as an independent trader is an entrepreneurial venture, and just like independent restaurants or tech startups, the vast majority of new traders fail strictly due to a lack of operational planning. The first pillar of that operational plan is a clear mission statement. It provides a rigid daily operational filter for every tactical decision you make. Let's say your stated mission is to produce an infinite wealth stream within 5 years. Having that specific objective written down forces you to constantly evaluate every new idea against it. When a flashy, high-risk setup crosses your desk, you immediately reject it because it doesn't directly serve your primary goal. Documenting your mission blocks out the noise of financial hype and the daily chaos of the news cycle. The final essential pillar of your business is the disaster plan. Amateurs spend their time planning for their profits. Professionals spend their time planning for absolute catastrophe. You have to document your exact responses to two main categories of disaster: acute personal emergencies that pull you away while holding leveraged positions, and massive, unexpected macroeconomic shocks. Think of historical black swan events like the 1987 crash, where the market moved 20% in a single day, or the prolonged market closures following September 11th. You must mentally rehearse your defensive actions for these scenarios long before the blind panic actually sets in. You face a clear choice. You can continue acting like the average investor, casually tapping the buy button and waiting for your inevitable statistical wipeout. Or you can commit to the unglamorous daily work of building a professional operation. The financial markets do not care about your general intelligence, and they do not reward potential. They only reward rigorous, systemic execution.